Invest in Europe. Are we ready for the challenges ahead? There are many great reasons to invest in Europe. Not only is it a market of 507 million people and 21 million businesses, it's also nothing less than the world's largest economy. Its GDP is higher than that of the United States and also higher than the GDP of China, Japan and India combined. But Europe faces many challenges. It is losing ground in the race for global foreign direct investment. It has lost half of it in 5 years. European private investment went down by 11% between 2007 and 2013. As a result, today, EU investment is down to its lowest level in 20 years. Nevertheless, the European Union is still the world's largest exporter of merchandise goods. 148 companies of the global top 500 are based in Europe. This is more than the amount of American or Chinese companies. But the obstacles to private investment in Europe increase. There is economic, political and regulatory uncertainty. Energy prices are too high. Tax regimes are often uncompetitive. Labor market's rigidity hinders the effect of our renowned skills. Finance is still difficult to access, and there are still too many barriers in the EU single market. So, yes, in Europe we do have more than 21 million businesses, and Europe is still the world's largest investor. But we need to wake up, because global energy consumption is likely to increase by 41% in the next 20 years, led by India and China. By that time, the United States will be energy self-sufficient, while EU production will decline, minus 57% for oil, minus 49% for coal, and minus 46% for natural gas. In fact, European gas import dependency is expected to rise from 66% to 84%, and industrial end-user prices are already at least twice as high as in the United States. However, the EU single market is a key driver for growth and job creation. It adds about 600 billion euros a year to the European economy. But barriers to trade and mobility leave an untapped economic potential of, well, 235 billion euros every year. And the overall EU tax burden is 50% higher than in the USA and 30% higher than in Japan. Fortunately, life expectancy in Europe is higher than in the US. 4 million Europeans are abroad to study, to train, to work or to volunteer. And we speak 24 languages. But we are irrationally afraid of taking risks in innovation. And we lose competitiveness in research and technology. Only 27% of all patent applications come from European companies. This is nice, but not enough, because the EU has been overtaken by China in terms of R&D investment in 2014, and the research and development gap with the United States amounts to $100 billion every year. Nonetheless, we do have the ambition to lead the digital economy, be at the top in internet, robotics, big data, connected industry, machine to machine. But only 7 of all the top 50 internet companies are headquartered in Europe. And the EU digital single market is confronted with heavy regulation, which is critically fragmented, for example, on data protection. So, there are many great reasons to invest in Europe. But the global trend is worth a closer look, because 90% of world economic growth will be created outside Europe this year. 33% of it will be created in China. And in 15 years, the emerging countries will produce 60% of the world's GDP. Today, Europe is still a jewel. But to shine tomorrow, we need better investment conditions now. Business Europe Day 2015. Invest in Europe. Let's make Europe stronger again.